In this video, we're discussing Lucid, Rivian, and Tesla. I'm going to be reacting in real time to some comments from a Wall Street stock analyst discussing these three companies. But before we do that, let's quickly head over to tipranks.com to check out his profile and see what has he said in the past about Rivian stock, Lucid stock, and Tesla stock. Is he credible or not? Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment theme merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. We're going to be hearing from analyst Garrett Nelson, currently a bottom 50% analyst according to tipranks.com. I mean, hey, at least he's not Gordon Johnson. However, if memory serves, he's had a few, shall we say, controversial calls on some EV startup stocks. Currently recommending people sell Fisker stock, hold Lucid stock, buy Tesla stock, hold Rivian stock, buy Ford stock, buy GM stock. By the way, let's just look at these two. Success rate on Tesla, literally a coin toss, 50%. Success rate on Ford, 33%. Success rate on General Motors, 33%. I cannot for the life of me understand how any analyst on the planet is currently recommending investors buy both Ford and GM stock. But see for yourselves, ladies and gentlemen, the guy's got a buy rating on both Ford and General Motors stock as I record this. What the actual? First of all, let's have a look what he said in the past about Lucid stock, a stock I've been warning investors from day one. Seriously? Okay, your money, not mine. Credibility is, of course, important. So with Lucid stock around the $41 range, he was recommending investors hold the stock. If you followed that advice, you'd be down about 50%, and he's still currently today also recommending investors hold Lucid stock. Good luck. Tesla, on the other hand, recommending hold at $57 back in 2019, then at $52 in mid-2019, recommending investors sell. Again in January 2020 at $83, sell Tesla stock. Later in January again at $117, sell Tesla stock. In March 2020, hold Tesla stock. In April 2020, hold Tesla stock. In July 2020, less than $300 per share, sell Tesla stock. Same month, mid-2020, reiterating, sell Tesla stock at around $300 per share. Then inexplicably out of nowhere, a couple of months later, at $350, buy Tesla stock. Okay, now on to Rivian. Hold. We started recommending to hold at over $50 per share and currently still recommending investors hold at about $30 per share. Good luck. Ford. Sorry to do this to you, Garrett. A sell rating on Ford stock back in April 2020 at $5.29. Then after Ford stock had quadrupled, based on them saying they plan to do things rather than actually doing the things that they said they plan to do, quadruples, and suddenly, a couple of years later, buy Ford stock at 22. Buy it again at 17. Buy it again at 11. Now on to Government Motors. 2019 at less than $40 a share, sell. April 2020 at around $20, sell. You can't make this shit up. Recommending investors sell at $32 per share in September 2020 and then inexplicably at $55 per share in May 2021. Hold. Fast forward to January 2022. Hold. Almost $60 a share. And now at $32, buy. Let's take a moment here. In July 2022, Garrett is recommending investors buy GM stock at $32 per share. Rewind to September 2020. He's recommending investors sell GM stock at almost the same price. Let's just not even look at the average return on his GM stock recommendations. Now, I just want to point out a bit of a trend. It almost seems like Garrett doesn't really know what the he's doing. There's some inconsistencies here, some logical inconsistencies. What happened between the sell rating back in late 2020 of GM stock at $32 a share and the buy rating at the start of this year at $32 a share? You know what happened? GM self-immolated, completely embarrassed themselves, have totally fucked up. Sales collapsing, epic recalls, all talk and no walk. GM, the Titanic, is currently sinking. Maybe Garrett the Carrot saw GM's strategic plan, EVs, how they're going to catch up to Tesla in 2025, which we all know is a load of horseshit and literally not going to happen. Maybe he's buying their BS. The reason for pointing this out is just to give you guys a little bit of an understanding of where this guy's head's at, or not at. Doesn't really seem to have a grasp on what's going on here. Really.
I'd like to focus on EVs now. Such a hot topic, and a pro is with us, and that is Garrett Nelson, equity analyst at CFRA Research. You have focused on all of these names with us. Lucid was a name that you liked at one point. You called a move to the upside and then you got out of it. Tell me a little bit, meaning you chose to change, once it ran up, you chose to change that enthusiasm. So you did, kudos to you for getting that run up. But now what? What are your takeaways from the recent report on Lucid? The stock's down today.
Sure, thanks for having me. Their earnings release last night was really disappointing. They cut their full year production guidance again.
Garrett, we got to talk to my friend. The fact that Garrett was disappointed by Lucid's Q2 2022 earnings, the fact that he appears to be surprised that they massively slashed their full year production targets for 2022 is an embarrassment and an indictment on Garrett's ability to A, think, and B, analyze. Why is it, Garrett, that me, some dickhead on YouTube who's high most of the time he records videos, has been calling for months, in fact the better part of a year, that Lucid would continually and repeatedly slash their full year 2022 production targets? I made at least half a dozen videos specifically calling this out. Pete Rawlinson, more than 6 months ago, was unwilling to reiterate their original target. He would not say the number. Clearly, he knew there was no hope in fucking hell of achieving that target. We're not off to a good start here, Garrett. Based on my understanding, the whole point of a Wall Street analyst publishing research and having their price targets and recommending people buy, sell, or hold stocks is to anticipate future events ahead of time. And if you can't anticipate something that's so painfully obvious that an idiot on YouTube makes 6+ videos on that very topic, maybe better not to be covering that particular stock. Don't get me wrong here, okay? No one's going to be perfect on all of their calls. But if you're covering a stock, surely it's your duty, your responsibility to know what the fuck's going on. Everyone with a brain saw this coming. Everyone. I mean, literally everyone. I'm not the only person that's been calling this out. I'm not the only person who pointed out Lucid's going to repeatedly slash their production targets of 2022. So, not off to a great start here. It's almost as if Garrett sees him a little bit more as a reporter. Oh, something happened. Time for me to change my price target, rather than somebody who's doing research and analyzing and anticipating things before they happen. Or maybe I just have a deluded picture in my mind of what an analyst who does research is actually meant to do. Am I being a bit hard on Garrett here, or does he really need to pull his socks up?
So they started the year saying they would produce about 20,000 units. Then they cut that to 12 to 14,000. And then yesterday they cut that again by 50%.
Oh, what a shock. Nobody could have seen that. Oh, wait. No, everyone saw that coming, didn't they? Yeah, it's awkward.
They say they're only going to produce 6,000 to 7,000 units this year. So, to put that in perspective, if you look at their deliveries in the second quarter, they only delivered on average about 7 to 8 cars per day.
It still sounds like Garrett's a little bit surprised. Maybe he hasn't heard that production's hard.
And so they're burning a lot of cash. They have a lot of overhead. They're burning cash at a rate of about $800 million a quarter. And so they're in a position now with less than $5 billion of liquidity, and it's going to be very difficult for them to turn the corner in the face of ongoing semiconductor shortages and supply chain issues. So
yeah, I get it. There are some challenges at the moment, but they're literally producing single-digit numbers of vehicles every day. It's not supply chain challenges so much as it's the challenge of ramping vehicles to volume production without going bankrupt in the process. Again, should have seen this coming.
So basically, why we went to a hold from a buy to it several months ago is because they were entering the stage of first production, and it is very difficult, especially in this environment, to really execute and ramp up to full capacity.
And the concerns that you have that, brought to my attention, which include just all the hurdles getting production out the door. The pricing is that they're much too expensive and they're going to need more capital going forward. These were some of the risks, right? Tell me more about that.
That's right. And a lot of people forget, if you look at Tesla, for several years, roughly from 2012 to 2018, they were in what Elon Musk has famously called production hell.
Yeah, I remember that.
And only until recently, a few years ago, they really mastered, they achieved scale and were able to bring their costs down and expand their margins and really became consistently profitable. But
so everything Garrett has just said is absolutely true. Tesla did go through production hell. I mean, the timing maybe is a little bit off there, but this is the same path that every EV startup and legacy automotive manufacturer beginning to ramp up their EV production has to go through. It's the same process. And there's the whole nobody else has Elon Musk. This may sound like a trivial point, but it's not. There's no question in my mind, Elon Musk is one of the most competent leaders on Earth. And Tesla, one of the most resourceful, big brain companies on the planet. Tesla has the elite players, and they still struggled for years. Why is it that most retail investors and most stock analysts out there automatically assume that if a company says they're going to ramp up EV production, they're going to do a much better job than Tesla did ramping up EV production? Why is that an automatic assumption? Why does nobody seem to understand that what Tesla pulled off was almost impossible, yet they did it? I can't for the life of me understand why so many people are willing to give credit to these new EV startups. Oh, we're going to produce this many vehicles. You should believe us because we said we're going to do it. Production is easy. It's going to end in tears.
It's very difficult. If you're an automaker, given how competitive the industry is, given how high, fixed costs and operating costs are, it's a very difficult industry to become a viable company. And so, Lucid is at that stage right now. You're seeing the difficulties that they're encountering. And, it would be nice if they were selling, producing and selling tens of thousands or hundreds of thousands of vehicles, but they're not even close to that point yet. And, these vehicles are well over six figures. The specs are great when you look at, 1,100 horsepower. The highest range model has over 500 miles of single charge range. The specs are great, but they're just not selling vehicles at a rate where they're going to become consistently profitable anytime soon.
Yeah. Well, it's interesting how you moved your price target. When I said kept, I was thinking how it's trading at 18, and so you kept it right at the current level. So you didn't pick a lower level. So do you think it's somewhat fairly valued around here?
Before Garrett answers, I'm going to jump in here. No, not even close to fairly valued. In my opinion, Lucid's current valuation is a physical manifestation of the bell curve. Really. Don't get me wrong. It is possible they may reach volume production on profitable vehicles without going bankrupt. But in my opinion, the odds of this happening are astronomically low. And therefore, at these current levels, Lucid's entire valuation, not part of it, Lucid's entire valuation is built on extremely bullish hopes and dreams. I do wish them all the best, but it is absolutely insane to me today that an analyst like Garrett would be recommending investors hold Lucid stock. Maybe he believes the probability of them successfully ramping to production without going bankrupt is a lot higher than I do. But I just can't understand. Where is this guy's head at?
We think a lot of these issues are really priced in at current levels. And if you look at the short interest, it's 22% of the float. So this is a very highly shorted stock. These issues are really no secret at this point. And so, we kept our hold opinion on it. Yeah.
How about Rivian? It's down 65% this year.
Rivian stock down 65% this year. Did anyone see that coming? One moment. So here's some guy on YouTube, a video from 31st of August 2021, about a year ago. Warning, Rivian IPO valuation is insane. Top comment, when you mentioned that Rivian's valuation is higher than SpaceX, I dropped my marbles. It's crazy. So Rivian stock's down 65% this year, and some guy on YouTube made a video almost a year ago saying Rivian's valuation is insane. What a highly inappropriate thumbnail. This guy seems to be implying that people who think Rivian's the next Tesla are idiots. How rude. Someone should cancel this guy. Tesla versus Rivian, a warning to stock investors. Seems like this guy was really banging the drum trying to warn people about Rivian's valuation and production being hard and blah blah blah. Even Elon Musk warning that Rivian and Lucid are headed for bankruptcy. Interesting. Another video, a great risk, referring to Rivian. Why does this guy have it in for Rivian?
We're starting to see some Rivian trucks on the streets now. Your thoughts on that one? It's at $35 today.
Kind of in a similar boat as Lucid, really. One distinguishing characteristic about them is they do have the supply agreement with Amazon. And so that's going to provide a lot more stability of cash flow going forward. So we do think they're in a little bit better shape than a Lucid.
All right, so that brings some stability. And then there's Tesla. It was above $900 yesterday. Your thoughts? I mean, it certainly was the leader when we came out of the gate. People thought EV, they thought Tesla. Now,
don't want to spoil anything, but they still are the leader. In fact, they are the only company currently in the race.
All the automakers are getting into the game. Is it still the behemoth? Do you like it?
We do, and it's a name we've really been pounding the table on over the last couple months.
Really?
We have a strong buy, $11.25 price target. Their quarter was just spectacular considering the challenges that they had with the COVID issues over in their factory in Shanghai. What you've seen in the last couple of weeks is, a lot of momentum following a very impressive quarter, and then also a run up ahead of the what we anticipate will be a 3-to-1 stock split here.
Do you think that it's a buy ahead of the stock split and throughout this year go after the stock split? Because sometimes things run up ahead of stock splits, right?
Yeah, I mean, studies have shown that over a 1 to 3 year period following a stock split, equities tend to outperform the broader market. And so there's lots of academic studies that back that.
I just want to jump in here quickly now. This may be true. We have to ask the question, chicken or egg? Is the fact that companies have announced a stock split in and of itself the reason that they tend to outperform indexes or the broader market in the next few years? Or alternatively, is it possible that companies that are growing so much that they see the need for a stock split have a brighter future on average than the overall market? Or is it maybe a combination? I personally think the idea of looking at studies showing this happens after stock splits on average is an absolute load of fucking horseshit. I mean, literally completely and utterly worthless. It's a data point that has no intrinsic value or predictive power. If you do enough studies on enough things, you can come up with all sorts of correlations and trends. But is it the stock split itself that has any bearing on how the stock performs in the future, or the company's execution? I'll leave that up to you, ladies and gentlemen, to decide.
And so, we really look at Tesla as a long-term buy. We put out a report last month, or actually in June, looking at the opportunity and the growth that they have ahead of them over the next 5 to 10 years. And really, it's one of the market's best growth stories, in our opinion.
And also, in my opinion, totally agree on this.
All right, I don't want to leave anything out. Is there anything else that you're pounding the table on that I left out? Tell me any other names that you love.
We like Ford a lot.
Now, to be fair, of all the legacy automotive manufacturers, I think Ford has a chance, but that's all it is at this point in time. Now, keeping in mind that Garrett does actually have a buy rating on Ford stock as I record this, again, I go back to the example of Lucid and Rivian. Ford are in no different of a position. Ford still have a Mount Everest in front of them, and if they're unable to scale it, they're dead. I wish them well and I hope they'll do okay. They probably will. But again, this is one of those cases where the risk reward just does not seem in proportion, in my opinion. Let me ask you guys and girls a question. Since Garrett has buy ratings on Tesla stock, Government Motors stock, and Ford stock, he is in effect recommending that investors buy all three of these stocks. It almost seems as if Garrett feels obliged to be covering every possible automotive manufacturer and have a few buy ratings here on some of the 3rd, 4th, and 27th place losers. I mean, hey, whatever floats your boat. Meanwhile, I would just rather continue buying the clear and obvious dominant leader and the company that has already won the decade.
A buy on Ford.
Yeah, and they did really well. They had a lot of sales. I mean, a higher price point. I know they've faced some issues, but the trucks and things that they did get out, they made money on them. So that was good news. Garrett, nice to see you. Garrett Nelson of CFRA. Thank you very much. I always love your insight on this group. Thanks, Garrett.
Now, guys, I've got to admit, it's really hard for me to understand. Do analysts and investors just not see the intrinsic risk of every company attempting to ramp up EV production? It's like there's an underlying assumption, oh yeah, they'll be fine. I mean, it might be a little bit hard, but they'll be okay. They're not going bankrupt, as if that's going to happen. Like, it really stuns me today that any analyst on the planet have buy ratings on any legacy automotive stocks. Don't get me wrong, a couple of these companies will survive, although they may be a shell of their former selves. But there just seems to be this underlying assumption. If a company says they're going to produce EVs, buy the stock. Or at the very least, just hold the stock and see what happens. Maybe I have a distorted perspective, but I personally believe that at least 90% of the world's automotive manufacturers currently in existence today, 10 years' time, will no longer be in business. And if that's true, I mean, if I own the stock, I'd be running for the fucking exits. But hey, that's just me. Personally, I wouldn't touch any of these companies' stocks with a 420 quadrillion foot pole. And I do want to be clear, some of them will actually survive, some will actually make it. But as I said, the majority, in my opinion, will not. So why would I be betting on a potential, possible, extremely unlikely survival story when there's already a clear leader with an unassailable lead in a dominant position, more profitable, scaling faster, with longer wait times, with the best product on the planet? I mean, it just doesn't make sense to me. What am I missing here? I'd love to know in the comments below. I promise I won't roast you too hard. Do you own any other EV stocks or legacy automotive manufacturer stocks? And if so, what's your rationale for having bought in the first place? And what's your rationale for still holding the stock today? I am genuinely curious. And lastly, don't forget to join Patreon with the card in the corner or the link at the pinned comment. If you become a member on Patreon, you'll instantly unlock well over 100 exclusive Q&A videos, plus dozens of other videos and instant up-to-date access to my Tesla stock price targets out over the next decade. So, see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.